In the energy quadrant, taking a look at the May crude oil futures contract, which experienced a big drop today, the largest single session move on a percentage basis for WTI since June 6th of 2015. Today's price drop started with a gap lower at the open to 70.38. Crude then rallied only 3 cents to the high print of 70.41, which was down 1.81% from yesterday's settlement. That was the high. From there, we cut through 5 handles of price down to 65.98, which was down 7.99%. And with a little bit of time left in the session, WTI crude is still down 6.9%. Today's move erased the last 10 sessions worth of rallies in a single session. The main driver of the sell-off was the decision at this morning's OPEC meeting. Oil-producing nations agreed to raise combined crude oil production by 411,000 barrels per day, speeding up the pace of their scheduled production hikes from the earlier announcement of an increase of just under 140,000 barrels a day. This took the market by surprise and caused the gap open lower and much of the move we saw all day lower in WTI crude. But crude oil is also a risk asset. When you have a risk asset sell-off as dramatic as we had today, this leads to predictions of slower economic growth and therefore slower demand for crude oil. If that's how all of this ends up playing out, it makes complete sense that crude's price would drop as much as it did on a day where we had a surprise in the volume of the supply increases that are coming, as well as a sell-off in risk assets, which for many believe points to a slowdown in the global economy and subsequently a slowdown in the demand for crude oil.